Bitcoin and the cryptocurrency market has seen over $1 billion in liquidations over the past 24 hours, resulting in the price action dropping just towards $100,000 yet again. In today's video, we are going to be discussing the recent weekly candle close, exactly what is likely to occur next, the main key levels you should be paying attention to, the altcoin market, and so much more. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are going to be discussing the recent correction for Bitcoin moving into the new week, the recent weekly candle close, the key levels you should be paying attention to, the upcoming week of price action, the altcoin market, and so much more. Before we get into it, go ahead and smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us on VIP by clicking the pinned comment of the free channel. You can click my name to contact me, or our two links, our first one being a 50+ month trading track record, and the second one being a 10-minute video showing you inside the channel. You'll get access to trade setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to our group chats with over 700 members, our general chat, our trading chart and education chat, our daily video help and news chat. Check it out, guys. Join up. We'll see you in there, and let's jump on in. So as we can see, over the past 24 hours, a lot has happened for Bitcoin. Just 4 hours ago, we can see Bitcoin had this amazing push toward the upside, breaking that $106,000 region. In fact, looking primed for a weekly candle close above 104.4. We discussed in our prior video that a weekly close above 104.4, being that prior weekly high, would have been a bullish weekly close, which would likely propel the market upwards into the new week. However, just moments before we saw this week close, within about an hour and a half, we actually saw another meme coin released by the Trump team, this one being under his wife, Melania. I hope I didn't butcher that name. Again, stripping a whole bunch of liquidity from the market, resulting in not only a correction for Bitcoin, but a correction for the altcoin market as well, watching the altcoin market plummet a lot, around $100 billion here on the total, and of course Bitcoin dropping multiple thousands of dollars within a matter of a few hours. So unfortunately, the weekly candle close did not close above the $104,000 region. It was not a bullish weekly close, but we are still sitting above some critical levels of support, which we'll be discussing in today's video. So alongside everything we'll be talking about with Bitcoin, we'll also be taking a look at the broader markets, the cryptocurrency total market, and of course the altcoin market, Bitcoin dominance, and all of the general usual stuff. So let's jump into the market data. As we can see, with a massive amount of volatility for the altcoin and the cryptocurrency space, we have seen actually over $1 billion in 24-hour liquidations, with 500 million of that coming within the last 4 hours. We're looking at $838 million in long liquidations, so 254 million in short liquidations, a total liquidation amount of 1.09 billion. Overall, 24-hour volume is sitting up 66% at 467 billion. Moving over to the market data and of course a DXY. We can see the DXY is not doing all that much here, holding pretty steadily around that 100 area. Again, we are expecting that to continue into the new week. We do have the interest rate results coming out very shortly in over a week, 9 days remaining for that. Currently, the probabilities are in favor of an interest rate pause. Now, the most important thing I believe will be not only what they decide to do with interest rates, but the Federal Reserve press conference held after, about 30 minutes after that interest rate decision, where they shine more light on the narrative they've been developing, which is they want to lean heavier into tackling inflation, which is contradictory to future interest rate reductions. But if they go ahead and change their tune again, we could see that bullish momentum return to the risk asset market. We could see the prices continue. So a lot does weigh on whether or not they decide to lean heavier into bringing inflation down, or if they decide to ease off that push towards lower inflation and to start to drop interest rates, which will of course push the markets upward. So a lot rests on that. A very major event you should be paying attention to. Obviously, another major event we do have coming up is going to be the swear-in for Trump, the inauguration day. This is going to be pretty big. Depending on how he acts, depending on what he says about Bitcoin, we could see some volatility come to the cryptocurrency market. So we do have to be aware of that one as well. Let's move over to the S&P 500. The S&P 500 looking all right, but not quite there yet. We are retesting and rejecting from that weekly high, that weekly resistance. We'll say it again, for the S&P 500 to commence that next leg toward the upside, we need to see two things. We need to see, number one, a break above the downtrend on the RSI, which would signify momentum has flipped back positive, which will result in a continuation higher. And number two, we need to get above this weekly high at around 6,100. When both of those things occur, we will likely see the S&P 500 commence that next leg toward the upside. Until then, cautiously optimistic and more or less sitting on the sides until we get more clarity surrounding that future economic policy. Again, monetary policy massively stipulates demand in the risk asset market. So until we get more clarity around that, it is hard to sit here and make any higher time frame decisions. Let's move over to the Bitcoin charts. Like we said, we're going to be taking a look at the short term, discussing the recent correction, what this correction means for altcoins and for Bitcoin, whether or not this is just a big bear trap. Are we going to push back toward the upside? We're going to be taking a look at what actually needs to happen as well for this crash, this correction, to turn into a higher time frame downtrend. So before we get into any of that, guys, go ahead and smash that like button, show some support. But most importantly, if you are interested in supporting the content and supporting yourself trading, sign up to BitGet, BitUnix, or BingX. These are the exchanges I personally trade on. You'll get a lifetime trading fee discount of 15% when you sign up. And most importantly, that can build up to 45%, which is huge based on your trading volume. Check it out, guys. Join up. It takes a few seconds. We'll play an ad and we'll see you back in a moment. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back in, and we're going to start with the total market cap and then jump over to the total altcoin market cap, because I think a lot of people are really wondering, oh, my altcoin's down 20% in one day. That's crazy. We're going to be taking a look at that. So, and then we'll jump over to Bitcoin. So for the total market cap, we've said it many times, and we will continue to say it. Your total market cap is a good indication of cryptocurrency as a whole. Now, we do know Bitcoin dominance is around 58%, so Bitcoin does take up the majority of that market share, but it is a good indication for the strength or the overall weakness trend, whether it be an uptrend or downtrend, for crypto as a whole. So we look at total crypto market cap for a more of a high time frame perspective, answering the question, how is cryptocurrency looking for the potential future? And the answer to that is, overall, it is looking okay. It is looking pretty good, actually, provided we remain above that 2021 high point. That 2021 high point being $3.01 trillion. If we see the $3.1 trillion level sustain as support, as we saw in our prior cycles, it is likely that we do eventually see a macro continuation upwards. And I will be remaining firm to that belief. Now, as you know, I'm all out of altcoins. I'm all in cash. I've just been trading since mid-December. I'm all out of Bitcoin. I've sold at 96K, re-entered 102, sold 106. So I'm sitting sidelined, but my overall macro expectation is that while we see that price action on the total remain above 3.01, I'm expecting eventual macro continuations. Now, we do know that monetary policy stipulates demand, and if we do see the Federal Reserve lean heavier into bringing that inflation down, we know the macro consequence of that, which will be again pausing interest rates. We know the consequence of that is not good for risk assets. We can see our interest rate curves over here relating to inflation, of course, and we can use that to formulate perceived systematic risk, which we apply to our risk beta over here, which we can correlate to our stock market and crypto market over here to see how these markets react essentially to the changing perceived systematic risk, which is heavily driven through, as you can see, interest rates, inflation, taxation policy, economic policy, societal perspective. But most importantly, as we see, if we go down to our flow chart, we know that if inflation continues toward the downside, this is generally going to be bad for risk assets, because in the process of inflation coming down, the monetary policy that has to be put in place to facilitate that is generally going to be pushing the dollar in a direction which does not benefit the risk asset market. So naturally, when interest rates come down, when we see those interest rates reduce, we see the dollar increase in value, and with that increase in value, we see the dollar decrease in value, and with that decrease in value, we see the risk asset market rally, right? Money moves from the dollar and into assets. So if we're going back to this total market cap, it does heavily rely on what the economic policy does transition towards again. That is going to be dependent on the meetings we do see in the near future. But from a technical and a structural perspective, if we're just looking at the charts and looking at what the charts are saying and historical data is saying, it is telling us that while we remain above the 2021 high, we are expecting macro continuations higher. It also tells us if we drop below the 2021 high, that could be a macro top signal for the total, and we could see altcoins and Bitcoin correct lower. If we look at the altcoin market, of course, we have seen a pretty nasty correction over the past 5, 6, 7 hours as a consequence of money rotating away. Now, with that, of course, the total market cap for altcoins is still looking relatively good, and it is going to look relatively good above 840 billion. Now, why do I say 840 billion? 840 billion is the dead cap bounce high of the prior cycle, the yearly level of resistance known as the altcoin season trigger. Upon the breakout of that region, we see Bitcoin creating a local top, we see Bitcoin dominance to drop, and we see an altcoin season initiate. Now, again, the altcoin market cap is not going to be a fantastic measurement for all altcoins. The total altcoin market is now heavily diluted with tens of thousands of new altcoins probably created a day, as opposed to 10,000 in 2021 and 1,000 total altcoins in 2017. So we do have a lot more places money can pull towards, which dilutes the market and spreads the money a little thinner, which means these altcoins don't perform as well as expected. If you're looking at prior cycles for historical comparison, there will be some altcoins that overperform and there will be some that underperform, but most will do a little bit less than what most people are expecting if you're looking at prior cycles, simply due to the fact of how diluted the market is this time around. So overall, altcoins are expected to continue to remain bullish above 840 billion, but that is going to be a case-by-case basis. Some are not looking good, some are looking fantastic. It is a case-by-case basis, but on a general consensus, above 840 billion, it should be okay. Again, guys, moving over to Bitcoin, we have seen a pretty steep correction. Let's start on that weekly candle. The weekly candle, it didn't close well. We were looking for a close above this high. This would have been a nice engulfing candle over here, breaking through that weekly high, which could have propelled the price action upwards. Instead, we saw that candle push toward the downside. We closed at a price of around $101.3 thousand, well underneath that 104.4 level we are watching out for. If we look at the daily chart, we can also see that RSI trendline has dipped its toes back under. Now, when we see this kind of emotional, this irrational exuberance in the price action, this emotional selling, this aggressive pressure, whether it be upward or downward movements, we have to take some of these things with a grain of salt. We have to really contextualize what is going on and more so look at our key horizontal levels and look at our demand levels. Is the price respecting these levels of demand? Are the buyers stepping back in? Not so much the momentum over here. So the momentum can be quite misleading when we have these aggressive sell-offs. Remember, momentum is always going to be a better indicator for picking reversal points. So picking points where exhaustion is developing or strength is developing, not so much when we see these aggressive moves downwards. It's not really going to be a good indicator of these immediate reversals. So we're just going to be ignoring that for now, because it's just not relevant. If we're looking at the price action from a horizontal perspective, there are two levels we are watching. Number one is going to be the downtrending diagonal resistance, in which we broke out of course, with rejection over here. We had a rejection over here, and we had the breakout a few days ago at around that 99K region. As we can see, this diagonal trend line lines up with a point of confluence, which is that $100,000 support. The $100,000 support to 99,000. As we can see, that diagonal trend line crosses right through. This is the level we want to sustain above. If Bitcoin is able to sustain above this region, it is likely we eventually continue upwards. If we drop below this region, it is very likely we see a continuation back into 97,000, and as we know, a loss of 97,000, the POC level, results in the price becoming higher timeframe bearish again for potential corrections back into the $92,000 to $86,000 region. If we're looking at the bigger picture for Bitcoin, as we mentioned, the total market cap is above 3.1 trillion, 3.01 trillion, and we will remain bullish on Bitcoin provided $86,000 holds. Okay, so as long as $86,000 holds, the macro expectations are still going to be bullish no matter what happens over here. Okay, only upon the loss of 86,000 would we actually see the total market cap breaking down, and that is when we're going to start to see some macro top signals print on our 3-day charts, on our 2-day charts, maybe even on our weekly charts, with the 61.09 on the RSI breaking toward the downside, being a historical sell signal for Bitcoin. So at the moment, all is well. I think this correction was a massive emotional sell-off, a massive amount of money rotating into this Melina, I don't know what the name is, coin, whatever it was. As we saw when the Trump coin released, we saw a lot of money rotate into that. It is kind of the same thing over and over again. So I'm not looking at this price action being too concerned. I'm more or less watching how this price action stabilizes, watching how the price action develops, and really just watching how the market finds its footing over the next 24 hours, moving into those interest rates. And as long as we kind of hold above 100,000, I think for the most part, we should see reversals for the market for altcoins or Bitcoin. But if we do drop below 100,000, I think that's when we can be a little more concerned again for the potential outlooks of Bitcoin. If we move back to those weekly charts, we can see still on the weekly charts, we are looking decent, right? So we are sitting above 93,869, which I'm butchering my numbers today, guys. Looking at too many charts. 93,689. As long as we hold above that region on the weekly, which is going to the weekly low and the weekly high, we have this weekly range, right? So we have this weekly low and this weekly high. This is the weekly range. Any price action on the weekly that moves between these two levels is considered healthy, normal price fluctuations, right? We have to understand that their monetary policy and therefore the economic climate surrounding potential risk asset growth is uncertain right now. So it's kind of unwise to then, if we know monetary policy drives or stipulates demand, and we know the monetary policy is uncertain, it's kind of unwise to assume that the price action is going to make a massive directional move upwards or directional move downwards, right? It is more likely we continue to chop within this range, moving into that decision, and then we make, hopefully, what I hope to believe is going to be a definitive move toward the upside, and worst case scenario, a weekly close below this region would be bearish. Remember, price action doesn't move randomly. it is supply demand. Okay, supply demand is based off on people's perceptions and emotions, which is influenced and controlled by the media, okay, by information they learn and gather from external sources, and very, very importantly, from the Federal Reserve. So keep that in mind, guys. Thanks for tuning in. Have a fantastic day. Catch you guys in tomorrow's video. Hopefully the price action has stabilized a little bit more. We can see it's still kind of coming down the short term. We've got a little bit more clarity with this movement, and we'll be able to give you a little bit of a better short-term update tomorrow. But in terms of macro, again, the two levels we are really watching, I'm just going to finish up the video again by saying this one more time, is going to be the weekly low, 93,680, okay, and the weekly high. This is the range we are watching. As long as we hold within this range, the macro's okay. If we drop and fall and close below this range, we do run the risk of a higher time frame correction, okay? And if we break above this range, that will be the trigger for a macro continuation. Those are the two levels we are watching if we're zooming out a little bit, and everything else between is to some extent just going to be a bit of noise. Thanks for tuning in. Catch you guys tomorrow. Peace.